Vikas Khemani joins us now on Talking Point this morning. He's founder Carnelian Asset Management and Advisors. Vikas, very good morning to you and great to speak with you here on NDTV Profit. Are you feeling the 2025 vibe yet, or is the 2025 vibe unfortunately not very positive at the get-go?
Morning, Tamanna. Wish you a happy new year. So I think, yeah, of course, we have to start the year, going forward. We have to look forward. So 2025 already started, and I'm sure, a lot to look forward to. Like every year, I am an optimist. I keep looking for things in a very optimist way. But yeah, I mean, just turn of the calendar doesn't change much. You have to do the same work, keep looking at the businesses, keep looking at the managements and keep identifying companies. So work doesn't change, just yeah, PR changes.
No. So having said that, Vikas, curious to know what you've made of the business updates that have come in so far. And let me start with BFSI, HDFC Bank, and a whole list of financials which are coming in. I would say that the good thing is, perhaps, or what's working for them is that expectations are already low. But do you see this as a further negative, the initial updates that you've seen, especially in HDFC Bank, where you see a growth of 3% year on year?
Yes, I think, in SDFC's case, we know that they have to go through this transition. There's no alternative to that. And I think we've been saying this for 4 or 5 years. And, this will still go through for some more time. But it is not industry specific, it's a company specific thing. And what they are doing is right for the company. But in general, specific, I think last year banking and financials were not as great, especially the banks. I think this year would be probably much better than last year. Most of the pains is behind. A lot of like you rightly said, expectations are low. But our largest holding, in banking space is ICICI Bank, which has done well throughout last year. We own Federal Bank, which has done very well last year. So out of top three, performing banks, we own two. So I think again within the same sector, you got to find company which you like, and I'm sure there will be winners within this space as well. In 2025.
Um, in terms of IT, and let me talk to you a bit about IT. TCS reports this week, Infosys next week. IT turned out to be one of the dark horses, I would say, in a sense, for 2024. If I look at it overall, you're looking at an interesting time next few weeks with Trump coming in, etc. Would you say that the turnaround that the street has been waiting for in IT is finally coming in, Vikas?
We've been quite positive on IT sector for many years, including last year. Like IT was one of the very well performing sector for us in our portfolios. It contributed to significant alpha. So I always believe that real money is made when you talk about beyond narratives. I think IT has a lot of legs to grow. I think people look at set of 3, 4 companies and say IT is not doing well. But within IT spaces, there are many companies which are growing at 15, 20%. I mean, last year we owned Cyient, eClerx, Negen. So I think a lot of companies have been kind of, which has done very well for us. So, and I think IT as a sector has long legs to go. Very clearly, three things. IT in India will continue to do well. There are three drivers: constant technology disruption, aging population in the global parts of the year, and our market leadership. If you see this, they are not changing, and they will continue to provide significant growth. And in my opinion, IT is a very sticky, nice, safe sector to grow. And as US environment changes, as the growth prospects with the new administrations get better, I think it can only get better from here, according to me.
IT can only get better from here, according to Vikas Khemani. But then would you go for the top line IT names, the big three or the big four, or would you look at more mid-cap kind of names?
Like I said, I think you look at individual business models where you can get conviction around growth of 15 to 20%, which probably large companies might be finding it hard to sort of deliver. So again, you pick I mean, you don't have to necessarily go after the large companies. Within that, I mean, last year what did well for us was HCL Tech Mahindra. They are large companies, so not necessarily each companies go through its own transition. We've been focused where there could be significant higher growth than the industry, and they tend to be a lot more in the tier two. or slightly smaller companies. But again, not to say that large companies cannot grow. We keep studying every company, and whenever we see the growth is accelerating, we will buy them.
I'm wondering, Vikas, how are you looking at the big ideas in the markets this year? For anyone managing funds, I think this is a tougher time because you have to, first of all, I suppose, manage expectations. What are you telling your clients? What is the conversation and the questions that you're being asked right now? And what are the kind of returns that you're seeing possibly in 2025?
Tamanna, you raise a very, very pertinent question. In my opinion, right now, the biggest risk in the market is the risk of high expectations. I think given the fact in last 3 4 years we have done very well, investors' expectations have gone up significantly high. Investors have started believing that 20% return is very easy to come by, which is not the case, which is not a normal case. You might get in a pocket, but you can't get sustainably for a very long period of time. So I would again say that biggest risk is risk of high expectation. And given the fact that we are on a backdrop of a very large run-up and slightly challenging macro global environment, probably this year could be slightly muted, or at least I would say keep the expectations low, invest with the low expectation, and keep the risk bar high. And at the end of it, it boils down back to identifying companies which can grow given the environment. Like I just said that when whole street has been saying IT is not doing well in last 3 4 years, we have had many 5 to 7 baggers in our portfolio coming within the IT sector. So I think the real money is made in looking beyond narratives, identifying companies, identifying management which can deliver better growth, and that is where I think firms like us, people like us, play a big role.
Managing growth and creating wealth beyond what you've seen in the last 3 years becomes very, very key, and that's important. Having said that, what in your view are 2 or 3 of the strongest segments that you're seeing in the market and 2 or 3 of the weakest? And let me be more specific. Do you think that consumption, FMCG is going to have another weak year? The Q3 updates are definitely not looking exciting, except for some exceptions in QSR, etc.
So first of all, I think I must say that this narrative of that consumption slowing down, we don't agree with that. We wrote a note last month on that. I think there is a change or disruption which is happening in the consumption patterns. People are no more consuming the way they were consuming, and so whenever this narrative is created by the large incumbent players. But if you see, and again, example I like to give you have the real estate sales all-time high, wire and cable sales growing 20-25% plus, and tiles not growing. I mean, there's something not matching, right? And because there are new smaller players, unorganized players coming and taking away the market share. Same way, whether it is in paints where new players are coming. Same way, I think in biscuits other players are coming. So I think there is a sort of change in the industry structure which might be happening, but that does not mean that consumption is slowing down. You got to look at the company which are kind of taking away that market share or are growing well, and that is our approach on that. So in fact, this year, first time in last 5 years, we bought consumption stocks and they have done well so far, very well. So again, I would again repeat that the real money lies in looking at beyond narratives. This narrative is set by few people, not necessarily true for the whole industry. The opportunity is always there. As far as the sectors are concerned, I feel in 2025, probably 2 3 sectors where we think real opportunities would be, especially one is banks, given the 24 backdrop. 25 may not be as bad, and you will see 15 to 20% return coming from the banking BFSI space. I think all the concerns will settle down probably in Q1 or Q2, but from a calendar year perspective, it might do well. Second, I think pharma and healthcare, in my opinion, will continue to remain very, very promising sector in 25. And manufacturing segment, which is though very wide, but within that there will be many opportunities, many ideas which one would be looking at. And I think that sector we've been bullish for some time, and I think 25 will continue to remain positive. Of course, you have to look at the right segment, right company again in that. So these are the 3 4 baskets where we think that a lot of opportunities will lie. Having said that, you keep looking at everything. It's not necessary that this is only place where the opportunities will be.
Do you see a big opportunity in the second term of Donald Trump? Do you think that this is going to be a big factor one way or the other? Vikas, how are you looking at it, and the India opportunity specifically?
India is a great opportunity from next 10, 20 years perspective. We are in one of the best wealth creation cycle. There's no doubt on that. Amrit Kal, is a period where we will go towards 29, $30 trillion of GDP. And in this period, many US elections will happen. US presidents will come and go. Good news is that Trump administrator, generally is positively disposed towards India. Trump is talking about growing, US economy, putting US economy on the growth trajectory, which is again good for India. So I think net, I don't see any negative coming from US towards India. If US economy grows, it will be good for all the APO space or IT space. So natural, I mean, generally speaking, US doing well is good for India. Of course, there'll be periods of consolidation, there'll be periods of correction. I'm not ruling that out, but I do believe that India is reasonably well placed even in a geopolitical perspective.
That's the big takeaway. But Vikas, before I let you go, and I know you don't like this to mention any specific company, so I won't force you to. But your top idea, your big one top idea for 2025.
That's India.
Yeah, but that's too broad-based. A little more specific than that.
Within that, I gave you three sectors. What else you want? You know that I don't say names, so then.
Yeah. Okay.
But I think, still, I only say that the best idea which can help your viewers is, stay invested, keep expectations low, keep the risk bar high. India continues to remain very well, great opportunity. Stay invested, don't change your equity allocation.
Yeah, don't change your equity allocation. I think that's an important point coming in from Vikas Khemani, founder of Carnelian Asset Management and Advisors.